Welcome to Cafe Mutual YouTube channel. Friends, equity markets have been touching new highs every now and then. In such a scenario, it is very difficult for fund managers to find attractive investment opportunities, especially at reasonable price. Considering this challenge, today we have with us Dhrumil Shah, equity fund manager, Nippon India Mutual Fund. Dhrumil has over 16 years of experience in equity research and fund management. So let's welcome Dhrumil. Good evening, Dhrumil.
Yeah, hi. Thanks a lot and good evening.
Okay. Dhrumil, my first question to you is that growth strategies tend to outperform value funds. Why do you think that MFD should still consider value funds for their clients?
Sure. See, if you look at the overall, mutual fund corpus or equity corpus,
Hmm.
more than 90% of the corpus is today chasing the, growth style of investing. There is less than 10% of the corpus which is chasing value investing.
Yeah.
So, for a adequate diversification of the equity strategy, I think it is very necessary to have some kind of exposure to the value strategy, and that's why I believe that you must recommend your investors to look at value strategies.
Hmm.
And one more thing, if you look at past 3-4 years, particularly post COVID, we have seen an unprecedented interest rate regime where almost we saw interest rate touching 0%. These kind of things are not going to happen in a near future. And typically you see that a huge amount of outperformance in growth kind of strategies come when the interest rates are kind of hovering around 0%, 1% kind of a thing. Today in the current scenario, we don't see we are going to get into that kind of scenario in a near foreseeable future. And that's why I believe that value strategy is something where investors must look at.
Okay. So, Dhrumil, there is no specific definition of value by the regulator. How does
Sure.
your fund house define value then?
Sure, sure. See, there are 3-4 things how we look at value stocks or how we actually construct our portfolio. So, for example, value can be a stock which was trading at maybe 40p earlier, now trading at 25 or 30p. That automatically becomes value, in my opinion. So, essentially, what I mean to say that a stock which is trading at a very decent discount to the long-term valuation averages, that automatically qualifies for a value stock. Value investing doesn't mean that we keep hunting a single digit PE stock. Value investing means that buying something, even a growth stock, buying at a reasonable valuation when probably that company is not doing well because of certain reason, or buying a sector when that sector is facing headwinds and valuations have now gone below long-term averages. That's how we look at value stocks.
Mhm. Okay. Okay. Dhrumil, Nippon India Value Fund has outperformed its benchmark in 1 year and 3 year period. So, what are the three things that have contributed to this performance?
Sure. See, if I look at broader kind of a theme that how these funds have has evolved or what kind of sectoral exposures it has taken. So one thing is very clear that COVID gave a huge opportunity for this fund to do well. Most of the sectors were available at a pretty much discount to their long-term averages, and this fund took advantage of it. Initially participating in IT companies where IT companies were available at significant discount to their long-term averages. And then we saw a tremendous rally in the IT sector. Later on, this fund also took advantage of a couple of capital goods companies where capital goods sector was initially not doing well. And again, the stocks over there were available at a decent discount to their long-term averages. That was another thing how this fund took advantage. We also took advantage of the auto sector when auto sector was not doing well. And the last where this fund took position in the banking and the financial sector, where in the initial phase of the recovery in the global and the Indian economy, financial sector was not doing well, and the valuations were available at a really compelling zone, I would say. And that's how this fund has done over a period of time by doing a decent amount of churning in their sector at the right time, and that's how we have been able to achieve this performance.
Okay. So, Dhrumil, you briefly touched upon the, stock selection in your value definition. But tell us more about the complete fund management process in the value fund.
Sure. See, there are a couple of ways how value fund we look at. So we never look to buy value traps. That's the rule number one. So, for example, a sector which is now facing a headwind because of a technological changes. So for example, a company which is operating in a segment now, there is not going to be relevance of that segment after 10 years. That company or sector becomes value trap. So essentially, we look to avoid that kind of value traps. And if you look at stock market, stock market behaves like a pendulum. So when a company or a sector is not doing well, it goes on one extreme end where you see earning cuts, depressed earning, and multiples are depressed. And uh, on the other hand, the pendulum swings on the other hand when you see that earnings expand and multiples also expand, and company becomes very expensive. And here we take advantage of this pendulum behavior of the market, where typically buying a company where they are not doing well and the valuations have become reasonable. That's the another way of doing value investing. So these are combination of two three things which I would put that how we keep deploying our money and doing sector rotation or a stock rotation.
Okay. Dhrumil, Nippon India Value Fund has over 30% of exposure to mid and small cap companies. So, what are the
Right.
reasons?
Sure. See, if we look at the broader market over the last 2 years, we have seen a decent amount of consolidation, which started somewhere from the October of 2021. Uh, in this block of 2 years, lot of ups and downs have already happened in the market. A lot of mid and small cap stocks have seen correction of more than 35, 40, 50% from the top. And hence, we believe that the fund is ready to take that kind of opportunity and look for more small and mid cap stocks which can eventually give good alpha over next 2 to 3 years. So that's the reason that why mid and small caps is having a decent exposure now in the fund.
Okay. And the fund has exposure to 77 stocks. So, isn't the fund over diversified?
Sure. See, if you look at top 30 or maybe top 40 positions, so top 30 position today, they account for almost 60-65% of our AUM. And when you look at top 40 position, they would be accounting for 70-75% of our AUM. So the entire, the focus of the fund is in actually in the top 40-45 stocks only. The balance is a tail position where either we are building position or either we are getting out from certain stocks, but we will be waiting for a right price. That how I would like to put. But the entire focus of the fund or the performance is driven by top 45 odd stocks in the fund.
So, Dhrumil, close to 50% of the total corpus is allocated to three sectors: financials, energy, and healthcare. What are the key reasons for this?
Sure. See, today, if you look at the global macro and the Indian macro, one thing is very clear that global macro is at a kind of a weak wicket. There could be a soft landing or a hard landing in US depending upon how situations are panning out. So India is going to outperform most of the developed market and many emerging markets. Clearly, banking and financial sector is today a very big overweight or a very big position for us. The reason being that this is a sector which is likely to grow at about 12 to 14% when we look at the credit growth in the country. Particularly NBFC space that's a space which is likely to benefit once rate starts to come off. And hence, we believe that this is the sector to be in. The predominant thought is to be more of an India focus rather than focusing on the developed market. That's the one reason why we are overweight on financial. Healthcare as a space, we believe that this is a space which is likely to compound their earning at 10-12%. And to have a more steadier compounding in the portfolio, we have a decent exposure to the healthcare as well as hospital sectors.
Great. So, one last question, Dhrumil. Why should MFDs recommend in Nippon India Value Fund to their clients?
Sure. See, the prime reason of recommending value fund, that this is the fund which comes with the contrarian thinking. This fund is not something which goes in line with the market. Okay, when you see large part of investors who are shying away from a particular sector or from a particular stock, this is the fund where we think slightly contrary, that how to maximize the return from a particular investment. That's how this fund is being designed, and that's how the portfolio is being constructed. And it is always good to have certain part of the overall exposure to the equity investment in a different style of investing, whether it be a growth style, whether it be a value style. So one if one wants to diversify the overall equity exposure, then a value fund also has to be there in the portfolio. Yeah.
So with that, we have come to an end to this interesting session. Thank you so much, Dhrumil, for your valuable time and insights.
Thank you. Thank you very much.
And finally, I thank each one of you for being such a wonderful audience. Have a great day at work, guys. Bye.